In my previous article on big tech's AI commitments, I argued that investors need to keep four words apart: announced, committed, recognized, spent. This deal adds a fifth: guaranteed. A guarantee is not capital expenditure. It is not necessarily debt, and it is not cash leaving the building today. But it is not nothing either. It transfers risk, and it can convert into a cash obligation under conditions the guarantor does not control. These distinctions are not academic, and the last enormous NVIDIA, OpenAI number proves it. In September 2025, the two companies announced a partnership to deploy at least 10 gigawatts of NVIDIA systems, with NVIDIA intending to invest as much as $100 billion as infrastructure was deployed. That figure circulated for months as though it were money. It was a letter of intent. In December 2025, NVIDIA's chief financial officer confirmed no definitive agreement had been reached and that the commitment was excluded entirely from NVIDIA's data center bookings guidance. In January 2026, the Wall Street Journal reported negotiations had gone on ice. Huang later described the $100 billion as never having been a commitment, but an invitation to invest up to that amount. What eventually happened was smaller and firmer: a $30 billion equity investment in OpenAI's funding round. Reporting differs on whether that replaced the earlier framework. The Financial Times said it did, while CNBC's source described it as separate. Either way, the $100 billion never became binding, and an investor who treated the announcement as demand was working with a number that no longer existed. That is the discipline the $105 billion deserves. Not skepticism about whether it is real. It is filed with the SEC. But precision about what kind of obligation it is, when it starts, what triggers it, and who holds the risk when it does.